talking about driving exports as an alternative to wholly depending on crude oil. That's what we'll also follow up on that conversation now with the Chief Executive Officer of Financial Derivatives Company, Mr. BISMARCK Rewane, as he joins us for the commodities segment. Mr. Rewane, good morning and welcome to the program.
Good morning and thank you for having me.
Great. And we seem to be hearing and having a lot of export-driven conversations in Nigeria these days. That was APM terminals. We also had one earlier in the week with Lagos Free Zone about efforts. And it does seem there's optimism in the air, even though not as much as we would have loved to see. What do you see?
Yes, I can understand this. What is happening is that because the exchange rate is getting fairly aligned with reality, exporters are being encouraged or incentivized to begin to export. Not only export, but we are beginning to see inflows of other, invisible sources. What I call invisibles are from services, and therefore, when those ones begin to come in, it begins to strengthen the currency. And let us step back a little bit and say, it's 48 hours since we had the MPC meeting. What has happened? How is the market reading this? And then we come back to the question of export intensity. Now, 48 hours ago, the currency from between then and now, the currency has appreciated by about almost 0.38%, both at the official level and the parallel market. We are seeing the parallel market trading at about 1618, and the official market trading at about 1592. The difference between the two is still about 30 naira or 25 naira, which is higher than what it is, but it's fairly safe to say that the currency is within a stable path and is moving in the right direction. Number two is that the DMO has had a treasury bill auction.
Sorry, Mr. Rewane, sorry, let me interrupt you before you go to number two. Talking about the naira, so yesterday we did see that appreciation, as you noted, both in the official and the parallel market. And yes. I noted that it was connected to inflow of FPI. I wonder if you could help us to understand what drove the gain on the naira of yesterday, this FPI that we're talking about.
I think the FPI is all of them bet on the fact that the central bank will bring down interest rates. The fact that the central bank maintained status quo was a plus for them. So they kept their money, rather than take the money out, they now kept it in. So it's a temporary technical issue in terms of technical advantage. Fundamentally, the currency remains stable and is fairly priced, well, no matter what you say, against the dollar. And therefore, people expecting, almost all the speculators are expecting that interest rates will come down by about 50 basis points. It didn't come down. Therefore, there's an incentive to, one, keep what you have in, and two, bring it back in. Also, you know that yesterday the British inflation rates came out, and it went up to 3.5%, which is much higher than was anticipated. So there's a possibility that the Bank of England will probably increase interest rates soon. So what investors are doing, taking short-term gains by investing clearly in those markets where you think there's some stability, where there's a spread, which is like the naira spread is there, the carry trade spread, and therefore those guys are doing that. So I wouldn't be disturbed by the fact that the naira is trading flat and is gradually appreciating.
And the CBN governor, Mr. Rewane, also said at the MPC that the naira is now more competitive. What does that mean, really?
Well, I think it's a businessman's language of saying that the naira is aligned closely with its fair value. So it's competitive means that I would rather stay long in naira than stay long in any other currency, or stay kind of neutral position.
But so Mr. Rewane, when you say that, doesn't it mean that perhaps it's because the naira has lost some value, so our imports, our exports are now cheaper? Doesn't it also reflect that stance?
No, that is the goal. The goal is to ensure that the value of the naira is stable in the markets. And so when it says it's competitive, it means that it's time you do not lose anything by investing in naira. Let me explain what that means. if the rate of inflation, official rate of inflation, is 23.71, and the 1-year yield on treasury bills is about 24.11, basically, by investing in naira, right, you don't lose anything. You are actually compensated. You are earning more than the rate of inflation, and that is what the central bank governor means by being competitive. Being competitive, one, is stable, two, and you are able to plan and forecast. And if you look at the balance sheets of the top 10 Nigerian companies on the exchange, you will find that many of them have domesticated their international debt. Therefore, rather than having due to parents or due to suppliers, you now have due to Nigerian banks. And that is healthy. So that what it means that this year, you're not going to have all these huge forex losses. Don't forget that last year, the top 10 or so had about almost 1.7 trillion naira of forex losses due to the translation losses because they were holding international debt. Now they are holding domestic debt. So when you put all of this in together, you see that the naira, even though it's fairly priced, it's not likely to witness those violent swings and make people lose money as they lost a couple of years, 2-3 years ago.
All
so
right.
we are on a stable.
Yeah, you on the second point, Mr. Rewane, on the DMO.
Well, what we are saying, let me go back now. The DMO issued their treasury bills, and those bills are coming at rates. And I just said it now that the rates were higher than the rate of inflation when you take the 1-year rate. So it means that for Nigerian investors, institutional investors, for FPIs, it is safe to buy treasury bills. And if you see that there was an oversubscription in the 1-year paper because that rate is quite attractive. So generally speaking, we have said in 48 hours, we've seen stable exchange rate appreciating gradually. We've seen treasury bill issues, which were slightly higher than the rate of inflation. Then also, well, what we are seeing also is that in the domestic commodity prices, we are beginning to see commodity prices increase again. Apart from tomatoes, which had come down because there was an extraordinary situation with the tomato Ebola, we took it up to 70K, but now it has come down to as much as 50K, and which is fair value. But we are seeing this thing because the planting season has started, and what we've seen recently is that the price of flour is up. I think they're announcing one on Monday. We've seen the price of gari down to 36,000, and we've seen the price of pepper down as well. So we are in for a season for the next 1 or 2 months where the price of those goods that are planted in Nigeria are going to be increasing. We have to watch out for that. But also, on the same note, we know that the price of petrol, PMS, is 890 naira at the fuel station, and diesel is at 1040. So effectively, diesel has come down, and effectively, the price of petrol at 890 is down. Now, Dangote has said that he's going to continue to bring down the prices as long as he gets the crude. So that's good news for us because there's a strong correlation between the price of petrol, the price of diesel, and transport fares, and also the rate of inflation. So it means that the next set inflation numbers that are going to come out for May may reflect some moderation or consistency in what we saw in April. If that happens, then the central bank and the MPC will be in a position to consider bringing down the rates of interest. Just like we said earlier in Ghana, this 2 years ago, the Ghanaian inflation rate was as high as 51%. Now, 54% is now down to 21%. So it does mean that interest rates can help moderate inflation. However, the inflation factor in Nigeria, a major cause of inflation is production and output constraints. So if we deal with the output constraints, which are structural, part of it power supply, part of it logistics cost in terms of road infrastructure. If you deal with those things simultaneously with managing the money supply and managing the interest rates, you might begin to see a moderation in inflation. I do not agree with the IMF that inflation is going to go as high as 27 or 30% this year and 37% next year. That was based on the assumption that the price of oil will fall very sharp. I do not think that's going to happen. So we can we can actually align ourselves with what the World Bank is saying, that the average rate of inflation this year is going to be 22%. I think that would be considered to be a realistic assumption at this time.
Yeah, Mr. Rewane, I'm glad you brought up the issue of energy, because when we look at the expenditure basket of Nigerians, I mean, some made available even by the CBN, one of their surveys shows that energy has even overtaken food, you know, as a prominent source of expenditure for Nigerians. And we know recently the World Bank had criticized Nigeria's electricity subsidy. The government they've been warning us about, you know, removal of subsidy of electricity. So what direction do you see this taking, and how, because obviously once they take out the electricity subsidy, it feeds into inflation at the end of the day. So I don't know if we're going to be talking about a cut anytime soon, but what trend do you see, or your expectation, when it comes to the issue of electricity, energy expenditure, and the issue of subsidy?
I think the energy equation is much more complex. You know, when you have one unknown, it's called simple equation. When it's two unknowns, simultaneous equation. When there are multiple unknowns, it's called quadratic. The Nigerian energy situation is quadratic. It's almost intractable. You have the question of the overhang of the debt of the people that bought the privatized discos. They have that debt, and many of them borrowed in dollars with high interest rates, and they are virtually bankrupt. So whatever money you pay to them, they actually use that to pay interest rather than improve the network. Two is the fact that these same companies are also being owed. They are not collecting the money that the subscribers from the subscribers, mainly government. Three is that there's a metering problem. The meters, we are talking about getting 5 million meters in a country where there are 37 million households. So that ab initio, there's a gap of about 32 million households without meters across the country. So what does that? It leaves with estimated metering. Estimated metering process is actually giving yams to goats to hold for you. The guys who are doing the estimated billing are taking money from people. They are gouging people. So the energy question and the solution to the energy problem is much more complex. That's why we're having 5,000 megawatts when our needs are in excess of 40,000 megawatts. So the gap is there. And quite frankly, you cannot grow optimally except to deal with the energy problem. So our proposal is that you've got to write off those debts and against the equity of these people and bring in new investors into the disco space. Two, you've got to be very aggressive in your metering. Three, you have to adopt cost-reflective tariffs. And the truth is that cost-reflective tariffs, if you have power supply from the grid, it's 3 times or 4 times cheaper than running your generator and your diesel. So if cost-reflective tariffs can lead to quality and increase in quality and improvement in quality and increase in quantity of electricity supplied, it is actually cheaper for the consumer than using his generator or whatever. So if you have that together with your solar, you will find that energy cost comes down. If energy cost comes down, growth increases. So there's that strong correlation as well between energy output, which is about, for every 1,000 megawatts increase, there's about maybe 0.2% or 0.1% increase in GDP growth. And don't forget that is major. So to be honest with you, yes, the monetary policy tinkering and all of that is creating some stability in the financial markets and the financial indicators. But the growth and investment indicators will be catalyzed if we do something about power and we do something about logistics, and more than anything else, we do something about security. Because even if you have power and you have logistics, you still have to do things about security. But it is said, and it is believed widely, that once you have increase in growth and employment, then security, the insecurity drops. So it is, it's one leading to the other. What causes one and what correlates with the other. I think those are the issues that we have to deal with. But definitely, what we are seeing is after the NPC, we are going to get GDP numbers very soon, and we are hopeful of. The consensus is that it's going to be over 3.6, 3.8%, which is positive. Then we are also going to see a couple of incentives for investors, if it is done properly, then probably, and most likely, you are going to see some slight improvement between now and July in most of the indicators. And I say this very, very responsibly. I mean slight improvement, because any movement in the right direction is always taken over by people to start showering praises and bringing out the champagne glasses. It is not time for champagne glasses and celebration yet. It's time to commend policymakers and to encourage them to reform the institutions and make sure that leakages are reduced, and also that the people begin to see the benefits of policies and actions. Right now, the policies are good, but the benefits are just trickling and nobody feels it at this time.
Yes, it's so true, Mr. Rewane, from conversations that the benefits of those policies are just trickling in. And you talked about how they could deal with that debt that has been placed at about 800 billion naira. That's government to distribution companies. That's a huge one. But well, we do have this platform to continue conversations at some other time. But Mr. BISMARCK Rewane, Chief Executive Officer of Financial Derivatives Company, thank you so much for your time and your views this morning.
Thank you for having me, Nini.